Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden within company reports so you don't have to. Today we're diving deep into the BNY Mellon Research Growth Fund semi-annual report for August 2025. Get ready for some juicy financial numbers that tell a story about where your money might be going. And hey, if you love getting clear, straightforward insights from these filings, make sure you are subscribed and have hit that notification bell. Also, definitely check out our Discord community linked in the description below for more exclusive discussions. So, what is the big picture here for this BNY Mellon Research Growth Fund? Well, this report covers the period from the 1st of March 2025 to the 31st of August 2025. Think of it like a mid-year checkup for the fund, showing how it has been performing and what has been happening under the hood. The report lays out key financial statistics. For instance, as of the 31st of August 2025, the fund's total size was a hefty one, $684 million. That is a lot of money being managed. They had 60 holdings, meaning they own stocks or other securities in 60 different companies, and their portfolio turnover rate, which shows how often they buy and sell assets, was 27.29%. A moderate turnover rate usually suggests a strategy that isn't overly aggressive with trading. Now, let's talk about costs for a hypothetical $10,000 investment. The costs for Class A shares were $55, which is about 1.02% of the investment. For Class C shares, it was a bit higher at $95 or 1.77%. Class I and Class Y shares were the cheapest at $41 or 0.77%, and Class Z shares were $44 or 0.82%. These costs are important because they directly eat into your returns. The report notes that fees were waived and reimbursed, which is great for investors now, but it also warns that expenses could get higher if these agreements are not extended. Digging into the actual investments, the report shows a detailed schedule of investments. Almost 98.2% of the fund is invested in common stocks. Looking at the breakdown, a significant chunk is in semiconductors and semiconductor equipment at 18.7%. Software and services comes in next at 18.2%, and technology hardware and equipment is at 8.9%. These are big technology areas, showing the fund is heavily weighted towards tech. Under semiconductors, we see major players like Nvidia Corporation with a huge holding worth over $255 million. Broadcom Incorporated and Micron Technology Incorporated also feature prominently. This is a clear bet on the continued growth of the chip industry. When you see Nvidia this high up, it signals a strong conviction in the company, likely due to its role in areas like artificial intelligence and data centers. The weighting here suggests they believe Nvidia will continue to be a strong performer. In the software and services sector, Microsoft Corporation is a massive holding, valued at nearly $149 million. Alphabet Incorporated Class C and Meta Platforms Incorporated Class A are also among the top holdings. This shows a strong focus on some of the biggest names in the digital world. Your money here is spread across companies that power much of our online lives and business operations. Microsoft is a titan, and its significant presence in the portfolio likely reflects its dominance in cloud computing with Azure, its vast software ecosystem, and its investments in AI. And in technology, hardware, and equipment, Apple Incorporated stands out as the largest single holding worth over $136 million. This concentration in a few massive tech companies indicates a growth-oriented strategy. They are betting on these giants to drive returns. Apple is of course a household name, and its inclusion at this level suggests the fund sees ongoing strength in its ecosystem of products and services, from iPhones to its expanding services division. Looking at the statement of assets and liabilities, we see the fund's total net assets at over $1.68 billion. That is a substantial amount of capital. The breakdown of net assets shows how much is in capital, which is the money investors have put in, and total distributable earnings, which is the accumulated profit or loss. The paid-in capital is over $645 million, and total distributable earnings is over $1.03 billion. This means a good portion of the fund's value comes from its investment gains, rather than just new investor money. It is also interesting to see the net asset value per share for each class. For Class A shares, it is $20.52, Class C is $15.7, Class I is $20.93, Class Y is $20.85, and Class Z is $21.59. These numbers fluctuate daily based on the value of the fund's holdings, Class C shares being the most expensive classes on the surface. Also have the highest net asset value per S-Hair here. The statement of operations shows the fund's income and expenses over the 6 months ending the 31st of August 2025. Total income was over $3.1 million, primarily from dividends. However, total expenses were much higher at over $7 million. This includes management fees, shareholder servicing costs, and other operational expenses. After accounting for reductions in expenses due to agreements, the net investment loss was nearly $4 million. This means the fund spent more on operations than it earned from its investments during this period before considering capital gains. But here is where it gets interesting. The fund had a massive gain from realized and unrealized gains on investments, a whopping over $195 million. This is what really drives the fund's performance. Even with an operating loss, the market value of their investments went up significantly, resulting in a net increase in net assets of over $191 million. This highlights how crucial investment performance is for mutual funds, often overshadowing operational costs in the short to medium term. The statement of changes in net assets further breaks down these movements. We can see that for the 6 months ending the 31st of August 2025, the fund had an increase in net assets from operations of over $191 million. However, distributions to shareholders, which are payouts from gains or income, totaled over $82 million. Capital stock transactions, meaning money from new shares, sold and redeemed, resulted in a net decrease of over $26 million. Overall, the total increase in net assets for the period was over $81 million, bringing the total net assets at the end of the period to over $1.68 billion. The financial highlights section provides a per-share view of performance over several years. For Class A shares, the net asset value at the beginning of the period was $19.22, and at the end of the 6 months it was $20.52. That is a solid increase. The total return for Class A shares for the 6-month period was 12.67%, which is pretty good. Looking back at the full years, it shows some ups and downs, with a substantial gain in 2021 and a notable loss in 2022, indicating the market volatility of recent years. The ratios here are important. The ratio of total expenses to average net assets for Class A was 1.09% and 1.02% for net expenses after reductions. This means that for every dollar invested, a little over a cent goes towards expenses. For Class C shares, the total return was 12.30% for the 6 months, and the expenses were higher at 1.94% total and 1.77% net. This tracks with Class C usually having higher fees due to distribution costs. Class I and Y shares, which are typically for institutional investors and have lower fees, show total returns around 12.87% and 12.86% respectively for the 6 months. Their total expense ratios are much lower, around 0.85%. Class Z shares had a total return of 12.84%, with expenses at 0.86% total and 0.82% net. This aligns with their lower fee structure designed for specific investor groups. Under the notes to financial statements, we find some key details. The fund is managed by BNY Mellon Investment Advisor, incorporated with Newton Investment Management North America LLC as the sub-advisor. This structure is not uncommon, with a main advisor overseeing a specialist sub-advisor. The fund's valuation policy states that investments are valued at fair value using a hierarchy of inputs. Level 1 is quoted prices in active markets. Level 2 uses other observable inputs, and Level 3 uses unobservable inputs. Most of their equity securities are valued at Level 1, meaning they're based on readily available market prices, which is good for transparency. Their investments in securities are heavily weighted towards equity securities, with common stocks making up the bulk of their assets. The total value of investments is over $1.66 billion. The fund also engages in securities lending, which is a way to generate extra income. They lend out their securities and receive collateral, usually cash or government bonds. As of the 31st of August 2025, the fund had securities on loan valued at over $11 million. The report mentions an unsecured credit facility, but the fund did not borrow under it during this period. This is usually for temporary needs or to manage fund redemptions. The management fee is 0.75% annually, and importantly, the advisor has contractually agreed to limit expenses for all share classes to no more than 0.75% until June 2026. This is a crucial detail for investors as it caps certain expenses that would otherwise reduce returns. This expense limitation is a significant point. It means that for most share classes, the direct expenses are capped, protecting investors from unexpectedly high operational costs. This is a common practice for mutual funds to attract and retain investors, especially in competitive markets. The board of directors reviewed and renewed the advisory contracts. They considered the quality of services, performance comparisons, management fees, and expense ratios. The report notes that the fund's performance was below the median in some periods, but the sub-advisor's efforts to improve performance were considered. They also looked at profitability and economies of scale. ensuring that fee structures are fair to fund shareholders. Now, looking at this report more broadly, what's the story? BNY Mellon Research Growth Fund is clearly a growth-oriented fund, heavily invested in major technology companies like Nvidia, Microsoft, and Apple. This strategy performed very well during this reporting period, generating substantial investment gains that more than offset operational expenses. The management's focus on these tech giants suggests a belief in their continued dominance and innovation. However, there are risks. The heavy concentration in a few large cap tech stocks means the fund's performance is highly dependent on the fortunes of these specific companies. If one of these giants stumbles, it could significantly impact the fund's value. The report also highlights that expenses could increase if fee waivers and reimbursements are not extended, which is something investors should keep a close eye on. The fact that performance was below median in some comparisons, even with recent gains, suggests that while they are making money in this specific period, their long-term track record needs continued scrutiny. The company's direction is geared towards growth, betting on the established players in the tech sector to deliver. The strength lies in their ability to pick and manage stakes in these market leaders, as evidenced by the impressive gains. The main weakness, as with many concentrated growth funds, is the potential for significant volatility if these key holdings underperform. Overall, for investors looking for exposure to large cap tech growth, this fund has delivered solid returns in this reporting period. But as always, do your own research, understand the risks, and consider your own investment goals and risk tolerance before investing. Alright, that is our deep dive into the BNY Mellon Research Growth Fund semi-annual report. What is your take on these numbers and what they signal for the company's future? Did the heavy tech weighting impress you, or are the expense risks a concern? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And be sure to subscribe and ring that notification bell for more straightforward financial breakdowns. Don't forget to join the conversation on our Discord community, linked in the description. Thanks for watching, and we'll see you in the next video.